What's up, guys? I'm gonna do another video on a FANG stock, or the newer name is a Magnificent 7 stocks. And today we're gonna do ticker Netflix. Alright, so today's stock, Netflix, NFLX. Sorry, let me just pull up some stuff here real quick. So the share price today is about $978 per share, so it is pretty spendy. If you get on a brokerage platform like Robinhood, Charles Schwab, and I believe Interactive Brokers, all three of those, I believe you can buy fractional shares. So I'm not 100%, but I think Netflix is pretty one of the more popular stocks. So you know, if you don't have, $978 to drop on one share of a stock, you can put in, whatever you have or whatever you want to spend, $20, $40. Again, this is not financial advice. Do your own research before you put any money in the stock market in general. Single stocks are definitely much riskier than, say, ETFs or mutual funds. So be careful if you're a beginner investor. I probably would not advise single stocks. Okay, anyways, let's get back to it. Next thing to look at, dividend. So like most tech stocks typically are also growth stocks, and they typically either have zero dividend or very low dividend. And in this case for Netflix, it's going to be, you guessed it, zero. So zero dividend, not surprising with the growth stock. Next thing to look at would be P ratio. Let's see, P ratio for Netflix is going to be 49. So PE is price to earnings ratio. In general, anything below 15 for PE ratio is probably considered a value stock. Anything above 15 is probably considered a growth stock. So the higher the PE ratio indicates that the stock might be overpriced, but it also indicates that the stock may have a potential to rise, and that probably a lot of investors also think that. So the PE ratio can indicate a couple different things. Next thing we're looking at, EPS, earnings per share. So EPS for Netflix will be 20. And you can calculate the earnings per share by dividing the net income of the company by the total number of outstanding shares. Any stock or company with a negative EPS usually means that they're not making any money. So I would try to avoid negative EPS stocks. Okay, next one we'll look at is sector. So, I, like most people, probably would think of Netflix as a tech stock, but technically they are in Communications. I believe it's communication services. So technically not information system, not a technology stock, but for Netflix, it is in sector communication services. Okay, what's next? Next is, let's look at 52-week range. So the range for Netflix for the past 52 weeks is anywhere from 537 to 999. So one share of Netflix almost broke $1,000. So pretty spendy. I'm gonna guess that once the price goes above 1,000, it will increase the chance of a stock split. I don't remember when the last stock split was, but once it gets pretty pricey, uh, they'll probably do a stock split so it's a little bit more affordable for most people. And that'll probably increase the chances that someone would buy, say if they do a 10 for 1 split, it'll cut it down to like $100 a share, for example. So obviously, $100 a share will be much more affordable to buy than $1,000 stock. But that's just my guess. They may run it up higher. For example, Berkshire Hathaway. I don't know what the exact price right now is. It's probably like 400K. Um, so Berkshire's the opposite of that, or Berkshire A shares, anyways. They do not want to split at all. So, but for most stocks, to appeal the general public, usually they'll do a stock split once the price per share gets pretty crazy. Okay, sorry, got off on a tangent there. What's next? So next, let's look at technical analysis. So technical analysis is basically looking at the stock price on a graph. So by looking at the graph, people try to guess on a short-term basis what the stock price is going to do next, whether it's going to go up, go down. A lot of people consider technical analysis basically like reading stock, or sorry, basically kind of reading tea leaves. So my thoughts are probably somewhere in between one of those. I think it can be useful in certain instances, but in general, you probably don't want to try to guess stock price in the short term, up and down volatility, anyways. Most stocks, unless you're a stock trader, which is dangerous because big chance you'll lose your money. If you buy stocks, you do want to try to hold it long term. What is long term? Probably between 1 to 5 years. If you hold a stock for more than 1 or 2 years, more than likely, you're probably gonna make money off of it. But you never know. Obviously, if there's a big market crash, the prices may be depressed for a while. A while is probably 6 to 12 months in some cases. Even when COVID hit in 2020, the market bounced back pretty quick after, I think, about 6 months. Obviously, that was probably related to government stimulus. But, anyways, I digress. So, technical analysis. So, looking at the 1 year chart for Netflix, it's going to be mostly up and to the right. But at the very end, I think about the last month or so, it does start going a little parabolic. And then that's the 1 year chart. But if you look at the 10-year chart, definitely the 10-year chart does show that the past 3 years, Netflix has been going parabolic. So, and that makes sense because the share price is up to almost $1,000. So be a little careful. Anything that looks parabolic, high chance that the um, share price will correct and come crashing down. Whether it's a little bit or whether it's temporary, who knows? So I probably would not recommend buying any Netflix right now since it's the share price. It's pretty hot, so pretty hot stock right now. So yes, I would not buy it now. My thoughts on the stock: I do own Netflix. I think I bought my first share probably around 2017, and it's done pretty well. There was, decent sized crash, I believe around 2022. And Netflix for sure is pretty volatile stock. It did come back, the past couple of years. Whether that might be because, Netflix started raising its member pricing fees and started cracking down on password sharing. I believe that those couple of factors did drive Netflix share price up a little bit. I think it's pretty safe stock as long as you're able to ride out the volatility, because it's definitely much more volatile than say a S&P 500 ETF or mutual fund. So if you don't have the gut to withstand the ups and downs, if you're going to end up selling because you get spooked, probably shouldn't buy the stock. Okay, well, I think that's Netflix here for you, and please click on the next video, guys.